Hey, what's up, guys? So I wanted to make a quick video. I'm not really sure when we're gonna have the weekly meetup, if it's gonna be Thursday or Friday, or if we're gonna come back on Saturday. And so I wanted to make a quick video, kind of go over a couple of different things, and I had a request on how to know when to get into a stock and how to read charts better. So I'm gonna do a quick video right now. If this is really long, like a pro tip, watch it in like two times speed. Just click on the playback speed and do it two times. And when I get to a part where you actually like need to like dial in and slow down, then you can play at normal speed. But you should be able to listen to me at two times speed and be completely fine. So let me share my screen real fast. So this is a video that I did the other day. I was talking to a couple different students of mine, and I was literally telling one of them, I was like, dude, you could literally be watching this on the phone and just be figuring out how to get in as entry points. So I have this thing drawn in. Here, 1 second. So I have this is the pre-market high. No, it's not. That is not. That's Hive Day. It ripped up. Oh yeah, I remember talking to like one of my friends. I'll pop the chart here in a second. But anyways, it really doesn't matter. But I drew in the Hive Day to where it dropped down to. Remember, you want to think of like ceilings and floors. And so what I'm looking for is if this thing just died, then I'm looking for this thing to bounce up to the 61 and 78 fib level. But like I've said in other videos, I'm not just looking for it to hit that level. I have to see it react a certain way. So if you watch this for a few seconds, you see you see that wicking out. Like it just dropped down, right? And then I see that. Like when I see that, like I'm in. Like I want to replay this one time real quick because I want you guys to see. Okay, so it's all the way up there. It drops down, and then like watch this next jerk. It's like a boom, that. Like someone just unloaded a bunch of shares. They either shorted it or they sold a big position. And like for me, like I'm absolutely in there. Like that's absolutely worth uh playing out. And what I did is like I went and got my I drew in the arrow to show like how I would play this out. If you don't have any money, it's really good to just do what I'm doing here. This is literally how I started out. And so I'm gonna pop down here. So this is the stock that happened, right? So how did it play out? So this was pre-market high, 325. I can't remember exactly where it was. I was talking to somebody and I was saying that I think what it did was um it was popping up around just under $4. I'm pretty sure like I told him that I would have taken a short in here um risking like 405. And I remember telling him, I was like, dude, I was like, it stopped me out. Like I would just walk away. It was a low float stock, which means doesn't have a lot of shares. Um, it can move really, really quick. I mean, this thing went from, what was that, $3 to 360 in 1 minute. Like that's insane. Like, and I told him when he was watching this, I was like, dude, I would not touch this because it's gonna be a crazy stock. But when it started moving up, I was like, this could be a really good chance to show, the guys in the room like, how to read stuff. And so what I did is on that video that I was there, like I saw this thing pop up and then it slammed to here and then slammed under. And I told myself, I was like, all right, draw in your arrow at the 61 fib level. That's where I would have realistically got in if I would have traded this, and I would have risked 422, and I would have covered half at the 1 minute J lines, which is another one of the things that the guy wanted to know is where to get out of your position at. For me, I do the same exact thing every single time. I get out half at the blue line. This is the 1 minute J lines. I get out half my position right here. My other half is at the yellow line. Another half is going to be at the purple line. And then the final piece will be down at the very bottom line. And so if you look at this, I would have my entry. I would have covered half, another half, another half, and another half. So the other thing that I would like to go over is this, first off, is not a stock that I would trade at all, especially for beginners. Anybody that's watching this, if you're a beginner or not, you should know. If you've not made money, say, I don't know, 2 or 3 months, like green months, which means you've actually made money in a month span of time. If you've not been able to do that, I would not be trading gap and extensions, period. Because for me, a gap and extension is the most risky trade that you could possibly take. Only thing you should be trading is gap and craps. And I'm gonna pop up, let's see if I can pop up thing real fast. So gap and crap is going to be any of these. So any of these. So what that means is this thing had a high in the pre-market, it fails, then it bounces up into the golden zone, which is the 61 to 78 fib level. And you take a trade in this zone, cover half, cover half, cover half, cover half. And I mean that's the only trades I would be trading, because any of the other stuff, see like this one for instance. So this is called a gap and crap. But if you look, well, this is a little bit different. This is old school trading, like where I was scaling in. I took a loss here. I was going in on the front side. I took a loss. I reshorted it. I didn't cover half because at that point in time, this is a really bad example, but this is a really old trade from I don't even know when this was. But anyways, you should be looking to trade it in this yellow zone, right? You should be covering half here, half, half, and I at least respected my stop. Once it breaks over this level, don't even touch it, because really it's going to be a stock that can play games with you a lot, and it's going to be very difficult to trade. Really, all you want to do is be trading, yeah, 2020. So I mean, like I was like 2 years into trading, so this one, and I lost a lot of my charts, so I don't have a lot of stuff I can go back and look at. But this thing pops into the golden zone. I take a short. I didn't cover half here like I should have. I covered half and covered half, and it didn't reach my end target. And I covered half over here right before the end of the day. But another thing is, so if you look at this, right? Clear drawing sets. So right now I have all these lines and stuff on there, right? But now you just got rid of it. How can you read a chart? Everybody has EMAs, they have all this stuff that is like their magical touch. This EMA is the holy grail. It's going to make you millions, millions of dollars, and like you only need to pay attention to this and this and this, and that's it. Like it's absolute bullshit. What they're not telling you is that the reason that those EMAs work is because they've found patterns that work with them. Everybody, like every single room I've ever been into that has different EMAs or different setups, slightly different setups, like it really doesn't matter. If you go and look at the two charts side by side, because I have different rooms that are a part of it. Like for me, for instance, what I like to do is I like this one for small caps. And the only reason I honestly like this one at all, anyways, is because I love to have my targets. That's all I use it for. I literally use it for targets. I don't care at all what it's doing. Like I'm not looking for any of this stuff anyways. I have another one that I prefer to use with big caps, and I'm learning for swings. But depending on what you're looking for, like for instance, you guys, I don't want to go too far off, but like technically, right in there is a good long indicator from his room. But it's like every single room you go into, like you can do the same thing. I like that last guys because it makes more sense to me for when I'm learning big caps and how to swing trade and stuff like that. I enjoy it makes more sense to me. This is much more simple for me because the other one, like I literally just factor in R, and R is like risk reward. Like if I'm risking 50 cents, I need to make at least $1.50 to make it work in my mind. And so for him, it makes it's very simple. But really, like all you need to know is start drawing in. So it topped out here, had another selling pressure here, another high there. It bottomed here, had another bounce here. Like you start drawing in lines. Like really, like if you have time, just go and get on Thinkorswim. You have to get on Charles Schwab and open up an account, but go back and just start recognizing these patterns. Like, you know, this thing is uptrending until right there. Right when it fills this point, for me, that's backside. But for me, where I also drew it in at, my entry was literally like right here. Why? Because it had a high, it hit a ceiling, right? It had a low, and it starts push back up. But if you look at the volume, the most important thing, right? The volume, it just dies out. It has one more push, and then when I saw it react like that on lower volume, I jumped in. And the second, like I looked to jump in, this volume just started skyrocketing, but the price is going down, which means somebody is unloading shares. And for me, that makes it a safer indicator to get in. Like really, realistically, and I'm not trying to make this like super, super complicated or anything like that, but realistically, all you need to trade is this. That's it. That's literally all you need. Start drawing in. Okay, so this has 1.4 million shares. Okay, well, where's the first time it drops under a million? Okay, right here. So that's also why I told the guy that I can't remember exactly where, like, I told him that I would take an entry like right in here. And this was right below $4. And I was like, dude, I can't. cover my position before $4. If this thing shoots past 405 and then holds, I'm out. And it popped up here, it hit 4, came back down, and then it popped over here to like 405. And I literally start counting. I go 1, 2, because I want to see if it rejects like it did when it's over here. If it just pops up to 405 and then stuffs back down and this candle turns red, there's no sense getting out. And like I made that rule because I had that happen to me a lot and I get super pissed off. So what I did, well, what me and my wife came up with is that we'll count to 5. And if it holds, then I'm out. And sometimes, yeah, it makes the risk a little bit bigger, but it makes sense to me. That's the other hard thing is like you have to figure out what works for you. But for me, so it has this uh big sell off from 422 down to almost $4. It's stuffed like 20 cents. And then when it opens up, it rejects on much lower volume. It comes down here, and this is exactly why I would have drawn in um my fib retracements because the safest way to trade these is I draw in from the very top wherever the bounce is, and I'm literally looking for this level right here. Once it comes up here in that video again, it's stuffed down to like here. And then I was just like, man, like I would have been holding the bid and I would have had 392 in my head. The second I saw the bid leave, start to chip 392, or if it pushed right through it, boom, I would have slammed the bid right there. I would have been risking 422 and I would have been in. So that's a 30-cent risk. So say you have what is that? This is literally how I would do it if I was you guys. So say you have $100 risk divided by 0.3 equals. So I'd be able to take if you're imagine if you had $100 risk, you'd be taking about 350 shares right here. Okay, cool. Awesome. Take 350 shares. I would have my other one, my J Trader script up so I could have my targets and stuff. But going off of based off of just this, right? So 30 cents, so I need 90 cents, right? So down here at $3. Boom. I would have been able to have all of it. You can absolutely trade just like that. You can trade however you want to trade. Like this room, I feel like the reason that it's going to be different is because I'm not here to tell you that my way of trading is the best way in the world. Like it's not. Like however you figure it out in your head to make trading work for you, that's the best way of trading. That's what nobody said. Like every room I've ever been into, I get yelled at for breaking the rules. And it's like, dude, whose rules are these? These aren't my rules. These are your rules. Why would I go into a job following your rules? The whole reason I got into this is because I want to be free, not only financially, but I don't want to be bossed around. I don't want to have a boss. I don't want to have people tell me what to do. And so for me and my personality, that works for me. Maybe you guys can absolutely be like, hey, I'm only here to make money. If I'm only here to make money, you don't care about if somebody's bossing around, awesome. Go and like ask them a trillion different questions or learn my system. Ask me a trillion different questions. I will literally tell you 100% exactly how I'd play this. And you can literally copy my setups 100%. But for me, it doesn't work like that. And so what I would recommend you guys doing though is going in and just charting this stuff up. Like, okay, like what where does this thing where's this where's the levels at? Where's okay, so it stuffed here has another one right here. It bounced from here. Then after this huge candle, it bounced right here. Like what you're trying to do, what you're trying to find is ceilings and floors. Now, when this thing goes up, This has a ceiling, right? Comes down, finds the floor. Okay, well, is this going to bounce hard enough from this floor to break through the ceiling, or doesn't have enough steam, the volume? Okay, it doesn't. Okay, well, you being a short seller, that is a very good indicator to get in, right? Uh, Another thing, like you can buy stocks, but for me, small caps, I only short. Like unless there's super rare things like COVID or something like that. But really, like this is exactly how you want to look at it. And the more time you have into doing this, the better. And it's kind of like how I drew in, like had that point touched, like I see it like this. Like it's riding a trend up, lower volume, kill candle. Then it even rejects. It even pops up into the trend, rejects. Like honestly, that would have been a great trade too. That's another thing. Like there's no such thing as like the best trade in the world. Like if you think about taking this trade up here, like okay, so that's awesome. Somebody could have done that, but like at the same time, if you're one of those kind of guys, you could have taken a loss here, taken a loss here, taken a loss here, taken the losses in here and here. And yeah, awesome. Congratulations. You got the very, very tippy top, but now you took one, two, three, four, five, six paper cuts. So now you make this huge win that takes back the other paper cuts. For me, I feel like this is a much better place to get in at. Or even right here. Like if you got in here, like what you could do is take a short here at $3.70, literally risking the high of this candle, have a 5 cent risk. That's better than the trade I took. I had a 30 cent risk. This is 5 cents risk. Okay, like now you just had a huge, it's all about perspective. It's all about finding like what works for you. I don't know if this is going to be good or not, but we're not figuring out when we're gonna have the meeting. And so I wanted to make something and put something out there and try to help you guys out a little bit. And what like if you guys watch this, ask some questions down below. Like what's something you would want me to go over? And maybe like throughout the week I can start making like quick little videos. I'll try to make them shorter than this. But hopefully you guys got something from here. If this is super confusing, also let me know on that too, because there's so many beginners in here. I don't know if I'm talking Spanish to you guys or not. And so, you know, I'm trying. So let me know what you guys think, and I'll see you on the next one.